Hi, I'm coming to you from this historic COVID economic lockdown with the second ever video version of the weekly economic update. I'm Steve Pierce, 25-year investment manager with my own fee-only registered investment advisory on Ann Arbor's northeast side, a town which I love and in which I was born and raised. I'd like you to know a couple things about my business. First of all, I use Fidelity. Fidelity houses client investments, produces statements, and online access. They're an industry leader in technology and in security, and I find they work very well. I'm not required to process business through Fidelity and don't process all of my business through Fidelity, but they work well with what me and my clients need. Other thing I'd like you to know is that I have a logo of which I am very proud. Now, if you can see, the P and F look like piano and forte if you're familiar with music. Piano and forte are Italian for soft and loud. I think it's safe to say that a long-term relationship with me will produce the same type of growth for you as the sound of music. Let's get started. This weekly economic update recaps unemployment, which reaches a historic high, while stocks climbed last week in response to economic reopenings. This week on Wall Street, despite historic downturn in employment, stocks managed to climb higher last week as investors were emboldened by economic reopenings. The Dow Jones Industrial Average gained 2.56%, while the S&P 500 advanced 3.5%. I just checked today, and year-to-date the NASDAQ market is up over 2%, which is definitely good news. The NASDAQ composite last week inched towards 6%, while the MSCI EFA index, which is an international index, slipped 1.09%. Tech stocks power NASDAQ. Last week's trading was driven by a cross-current of emotions, worries about weak corporate earnings and pace of business reopenings, as well as optimism over the pickup in economic activity and progress on developing a vaccine. Stocks posted back-to-back daily gains at the end of the week despite troubling economic employment data. Perhaps the headline of the week was that the technology-heavy NASDAQ Composite Index moved into positive territory year-to-date. And mentioned earlier, it's now up about 2.6% as of midday. A silver lining in the jobs report last week brought into stark focus the number of jobs lost since the start of the economic shutdown. Since mid-March, unemployment insurance claims have reached 33.5 million. The pace of newly unemployed has slowed down, however, with recent weeks at about half the rate at the peak in late March. April's employment report, released on Friday, saw a spike to 14.7% in the unemployment rate. As severe as these numbers may be, 88% of April's newly unemployed characterized their job loss as temporary rather than permanent, as opposed to 47% of the newly unemployed in March who said their job loss was temporary. Tuesday, tomorrow, Consumer Price Index report gets released. Thursday, jobless claims. Friday, retail sales and industrial production. In the week ahead, Wednesday, Cisco Systems reports earnings and give you a brief rundown on markets year to date. Dow Jones Industrial Average is down 14.74%. The NASDAQ Composite Index is up 1.66%. The Morgan Stanley EFA Index, which is international stocks, was down 20.57%, and the S&P 500 was down 9.32%. These contradict numbers mentioned earlier. The NASDAQ market performance year-to-date was as of today, and these are as of the close of market on last Friday. I'd like to thank you for tuning in to the second ever weekly economic update. I appreciate you watching, and I'll see you next week.